Breaking news, a crucial alert, has just come in from HMRC, and it directly affects anyone with savings of £3,500 or more sitting in their bank account. If you thought your money was just quietly growing with interest, think again. His Majesty's Revenue and Customs has begun sending out letters that could lead to unexpected tax bills for thousands across the UK. This comes as part of a wider move at the start of the 2025-26 tax year, where HMRC is scrutinizing savings interest more closely than ever. So what's going on? Well, here's the deal. Your bank or building society automatically reports how much interest you've earned to HMRC unless that money is tucked away in a cash ISA, which remains tax-free. But if your savings are in a regular account and the interest you've earned pushes you above your personal savings allowance, you could be in for a surprise. The personal savings allowance is £1,000 for basic rate taxpayers. That's people earning under £50,270 per year. For higher earners, it drops to just £500. And for those making over £125,000 annually, the allowance disappears entirely. That means every single penny of savings interest you earn is taxable. Now here's the kicker, even a modest savings pot of £3,500 could get you in hot water with HMRC if it's locked into a fixed rate account. Why? Because fixed-term savings accounts often pay out all of the interest in one lump sum at the end of the term. So let's say you put £3,500 into a fixed account for 3 years at 5% interest. You're looking at roughly £525 in interest, which might not sound like much, but that entire amount lands in your account in one go. That could push you past your £500 allowance in one tax year, especially if you're a higher rate taxpayer. Once that threshold is crossed, HMRC will be notified and you'll likely get a tax demand. And for those on higher incomes, the tax bite gets sharper. If your savings interest goes just £100 over the limit, you could end up paying £40 in tax. That's 40% of the excess. It doesn't take a huge sum to trigger that bill. For example, if you have £11,000 saved in a standard easy access account, earning 5% interest, you'd make £550 in a year. If your salary is above £50,270, your allowance is only £500, so that extra £50 becomes taxable. And remember, this doesn't even count other interest you may be earning elsewhere. Even basic rate taxpayers aren't completely safe. Imagine you have £21,000 saved and earn 5% interest. That's £1,050 in interest for the year. Since your allowance is £1,000, you'd still owe tax on that extra £50. It's not just traditional savings accounts that count either. HMRC takes a wide view of what they call savings income. This includes money made from credit unions, peer-to-peer lending, investment trusts, open-ended investment companies, even trust funds, bonds, annuities, and some life insurance policies. So even if you're not earning huge sums from one single account, your total interest across all sources might easily exceed the limit. If you've already gone over your allowance, here's what happens. HMRC will usually adjust your tax code to collect what you owe. This happens automatically if you're employed or receiving a pension. HMRC estimates your current year's interest based on last year's figures and makes changes accordingly. If you're self-employed or have more complex finances, you might be required to file a self-assessment return to declare the interest yourself and pay the tax directly. So what should you do now? First, check how much interest you've earned across all accounts. If it looks like you're close to or over your allowance, be prepared. You might see a letter from HMRC soon, or even a tax code adjustment. And if you're unsure, it's always worth getting financial advice or using HMRC's online tax checker tools. In today's world, where savings interest rates have finally crept back up after years of being painfully low, more people are finding themselves with taxable interest than ever before. Don't get caught off guard. Stay informed, check your accounts, and understand your tax responsibilities before HMRC comes knocking. Thanks for watching. If you found this information helpful, make sure to hit the like button, drop a comment below with your thoughts, and most importantly, subscribe to my channel so you don't miss any future updates that could save you money. Stay smart, stay prepared, and see you in the next video.